Advice Online has been developed for clients who require simple advice over short time periods. To provide affordable advice that is financially rewarding for advisors, we have developed a means by which the client and the advisor can work together to keep costs down. It is also designed for use by superannuation funds, as the government has indicated that 5 million people will be retiring in the next few years, and there are not enough financial advisors to service this market. This is the first of 3 demonstration videos. Please watch them in order as they will build on the previous information. The advisor logs into the software, selects the tab Clients and clicks Add Client. While the advisor only needs to complete the email, it is recommended that you complete all the information that you require. The client will have the opportunity to complete unfinished fields when they log in. The client will receive an email that appears to be from your company but is actually from support@Advice Online. The client clicks on the link, accepts the invitation, and they create a password. Once completed, the client will be advised that the invitation has been accepted and they will sign into their account. The client is taken to the fact find, starting with an explanation of the process. The first tab is to complete any information not completed by the advisor. As many of these advice episodes will be delivered online without any personal contact, it is important to gather information about the client so that you can fulfill the Know Your Client rule and ensure you are providing the advice they want. The first panels ask for information about the family situation, followed by employment, health, and estate planning. The panel for investment experience gives the client the opportunity to give information about their financial knowledge and also refers to the financial literacy program included in the software. The investment risk profile is intended to give the advisor some information about the client's preferred investments and risk tolerance. The objectives panel is intended for the client to advise the advisor of what they see as their highest priorities for the next 5 years. The final panel asks the client what advice they require. The section Finances has been designed so that any client should be able to complete the information. Note the inline help for every entry so it is easy for the client to check what is required. The personal budget is intended to show living expenses. Other costs such as loan will be catered for in other areas of the software. The budget can be as simple or as complete as the client chooses to provide. Milestones and goals are designed to alert the advisor of any planned major purchases or lifestyle changes. There is a drop-down list where the client can add more if required. In this case, the client has indicated that John wants to buy a $30,000 car in 5 years. As part of the advice process, the advisor can include in the plan a savings regime for the next 4 years so that the cost of the car will have been saved by the start of year 5. It is intended to encourage clients to save rather than to borrow for personal items. Mary has indicated she will return to full-time employment in 5 years with a salary of $100,000. When the advisor starts the plan, they should edit Mary's salary to include the increased salary for the last 5 years of the plan. The transaction account is the account through which all transactions transact. This is a difficult concept for some people, but the help icon provides the explanation required. The real estate sections allows the client to enter the property details and one loan linked to the account. The client can also add additional loans, but they need to ensure that the value of the home is listed only once. This client has no interest earning accounts, shares or managed funds. The client has indicated they both have personal loans and a credit card debt. Clients can add multiple superannuation accounts, but only one can be nominated to receive the superannuation guarantee levy. A detailed explanation of superannuation will be provided in the demonstration video for the retirement plan. Both clients have life insurance with their superannuation funds. The second payment option is to pay the premiums from the transaction account. The final panel is most important. The program has calculated the cost of the home and investment loans and asked the client how much a month they want to allocate to making additional loan payments and other investments. It then calculates the percentage of gross salary to fund the loans and savings. In this case, it has calculated the percentage to be 23%. This information is added to the salary accounts and is used to fund the loan payments and savings. Once the financial information is completed, the client or the advisor can check the information by generating the fact find report. All reports start with a short disclosure statement and explains the importance of completing the fact find accurately. Each company creates their version of the disclosure statement. Page 2 gives an overview of the client's net worth and asset allocations. Page 3 shows the assets and liabilities. Page 4 shows salaries and expenses, with the last line showing the amount of unallocated funds. This includes any tax liability which can't be included in the fact find. Page 5 lists milestones and goals, insurance and loans. Page 6 sets out the information provided by the client in the section About Me and My Family. This information can be imported into your customised reports. The software includes the use of two-factor authentication. The final step is to notify the advisor the fact find has been completed. The advisor will receive notification that the fact find is ready. They click on the link and it will take them to the sign-in page of the software. The advisor logs into the software and selects a client. Here they can review the fact find and report. The next stage is to develop the financial plan. Note that only one plan per client can be created, but that plan can be edited. The advisor clicks on the drop-down menu and selects Create Plan from Fact Find. All the information from the fact find is generated. The first stage is to complete the plan details, giving the plan a name and selecting the plan type. There are 3 plan types: savings plan, retirement plan, and what we call a lifetime plan, which is a plan that transitions from the savings phase to the retirement phase. Demonstration videos will be provided for each of these 3 types. The dashboard is a great place to start for you to review your plan as you create it. Simply move the slider to any year and view the values. By clicking on the information icon, a graph for the length of the plan is included. In addition, there are a set of key indicator graphs. These graphs are likely to alert you of any missing information. Once you have published the advice, the client will have access to the dashboard. The objectives allows you to write a brief summary of the plan. In addition, the milestones are included and you can add to them if required. You will recall that the client listed buying a new car for John in 5 years. The advisor has also added the saving for a car for Mary starting in year 6. The advisor believes the client needs to set up an emergency cash account, so this is created so allocations can be made in the investment plan. The client indicated their preferred savings for investment is ETFs, so a managed fund is created to accommodate this. Note the tabs where the advisor can change from the default entries. In this case, asset allocation is changed from balanced to aggressive. The investment returns have been changed to 5% income and 7% capital growth. The dividends are reinvested, but there is the option to pay the dividends to the transaction account. Imputation credits of 40% have been added. The next stage is to allocate the $500 a month for paying down debt. Credit card debt with the highest interest rate is chosen. As you can see, the credit card is repaid in 6 months. One of the problems with cash flow modelling software is that all calculations are made on an annual basis, so in this case the balance of the repayments are not accounted for. To overcome this problem, $250 a month could be allocated to another loan. For this plan, it has been added to the home loan in year 1. In the second year, the $500 a month is allocated to the personal loan, but again there is 5 months unallocated. This $208 a month is allocated to year 2 of the home loan. All loans have a graph view showing the effect of additional payments and a data view showing the details of the loan with additional payments. The last loan is the home loan. The unallocated payments from the credit card and the personal loan have been applied to the home loan. Thereafter, the full $500 is allocated to the home loan. Note that the time has been extended to 20 years and the software will calculate how much interest is saved if the additional payments continue for the length of the loan. The investment plan is where you can quickly allocate your savings from salary to investments, in this case the emergency cash and the ETF. These values are deposited as a monthly allocation to each fund. Because the client does not have sufficient funds for emergencies, all the savings available are allocated to the emergency cash account in year 1 and thereafter 10% with the balance allocated to ETFs. In the emergency cash account you can view the deposit from salary. The details of the ETF can be viewed. In addition to the investment plan allocation, additional funds may be purchased from the transaction account at the start of the year. The funds are sold as a percentage of the fund at the end of the year. Percentages are used to maintain the dynamic nature of the software. The transaction account is the account where all transactions are processed. It is important that the account is not overdrawn. At the top there are 3 tabs designed to let you add one-off items. The first is for one-off receipts. These would be items like an anticipated inheritance or sale of a business. These items are not taxed. One-off withdrawals allow you to withdraw the fund from the plan without assigning it to any purpose. It is not something you would normally use. One-off expenses could be items such as accountancy fees, which are taxable and therefore the person has to be assigned. There are also expenses such as buying a car, which you do intermittently. There is a process to the order in which transactions occur. These transactions are at the start of the year, monthly deposits and withdrawals, and end of year deposits and withdrawals. Now the plan has been completed, the advisor must write their advice using the SOA panels. There are 20 suggested panels and 10 custom panels in case you need them. This is how it works. In the advice record template, each of the first 20 panels are listed in order, followed by the first 3 custom panels. If you don't write anything in the panel, it will not be displayed in the advice record. This means you will have to type in the heading for any panel chosen. There is a wide range of formatting options. The important thing is that you can make your advice as simple or as complex as you require. The government has indicated that it will change the legislation to allow shorter and simpler advice records. For this exercise we shall keep the advice short and simple and use the following panels: Executive Summary, Scope of Advice, Reasons for my recommendation. The Executive Summary states, You have indicated that you want to allocate 23% of your gross salary to paying down your debt and investing. You should commence by paying down your credit card and personal loan using the $500 nominated for additional loan payments. Once both are repaid, you will pay down your home loan. As you don't have an emergency cash account, I recommend that for the first year you create one using the balance of your savings after paying loans. In the first year this will be $47,000, of which $39,270 is applied to the repayment of your home loan and $6,730 to your emergency cash. After the first year, you should allocate 10% to your cash account and 90% to your ETF account. I recommend you view the interactive report The First 5 Years of Client Plan for details of your plan on a year-by-year basis. The scope of advice states, this advice has not provided any specific financial products. You should choose an ETF that will suit your needs. I have not considered your insurance requirements. There is a report for self-evaluation of insurance needs. You may wish to complete this report, and if you require assistance with choosing more insurance, then this will be at an additional cost. The reasons for recommendations are that you are still young and I want to set you up for a sound financial future. This means you should not engage in personal loans but save for these items. If you pay down your home loan quickly, less non-tax deductible interest will be charged. By investing in the ETF, you are being exposed to investing in equities. I would suggest you return in 5 years to assess your financial position and seek further advice to expand your investment portfolio. The advice record can now be generated. The interactive version is the most convenient way for your client to review your advice. They can also view a printable version. This is the view of the section My Advice. Note that the advice is written as text and the software has been generated as a table of information called Financial Performance Record. Instead of reading, the client can also click the audio button and listen while they follow the information on the right. At the end of the report is the option for both the client and the advisor to sign the advice record. Where you are not providing product-specific advice, it may not be necessary for the client to sign. The final step is to click on the tab Publish Advice. The client will receive an email advising them the advice record is available. The client signs into their account. The advice section is now visible and commences with the plan details. The dashboard allows the client to move the slider to any year and inspect the results. By clicking on the information icon, a graph for the length of the plan is displayed. Just below are the key indicator graphs. The reports commence with the advice document and 3 interactive reports that supplement the information in the advice record. There are an additional 10 reports the client can access if they require additional information. Some of these reports are on-screen reports. They are Plan Outcomes, Cash Flow Summary, Assets and Liabilities, Tax Estimator. That concludes the demonstration video for Savings Plan. For a full understanding of all the features of Advice Online, please watch the remaining videos.